I'm Julia from Shortlisted Productions. Today we have an interview with Tom Blomfield, who kindly agreed to talk to us about his bank, which he founded 2 years ago, Monzo. Thank you very much for your time.
You're very welcome, Julia.
You are in the middle of the crowdfunding campaign. How's it going?
It's going great. So we did it slightly differently. We had this pre-registration period which finished about a week ago, and now we're selecting people by ballot. So I think we're almost closed now. We've got something like 5,000 or 6,000 people supporting, actually getting to invest money. We had more than 40,000 people pledging money, which I think of itself is, if you're looking for a record, I think that probably is a record there.
What are the main advantages of using crowdfunding compared to VC money?
I think it's really around community engagement, sort of broadening out the appeal and then deepening the connection with the people who are already supporters of Monzo. So crowdfunding is still relatively immature, I think. It's not we couldn't go out and raise 20 or 30 million today. I don't think it's ready for that. It's also relatively operationally complex and costly way of raising capital. But there are huge advantages, which is that 5,000 or 6,000 people now get a card saying, I'm a Monzo investor, and they go around showing all their friends and telling people about this bank they actually own a part of. So that emotional connection is impossible to replicate. So it brings our total funding to 35 million. A main point of that is to get our regulatory capital in place. So as an authorised bank, we have capital requirements. We agree with the central bank. We're required to have those in place to launch fully. And that's the reason you've seen this round coming now. It's one of the final steps to getting our full license. And a lot of that money will sort of sit there as regulatory capital. We actually won't spend it. We'll probably stick it in the Bank of England in overnight cash and make 0.25% interest on it, which is a very inefficient way of using your money, but a very, very prudent and safe way. The rest of it will go on growth broadly, so on salaries, paying the people you see in the office around you, and on expansion, so opening up more accounts for customers and really operationalising the full bank. I heard Amazon once described as a charity for the benefit of consumers worldwide funded by venture capital. And I sort of like that. Bankers sort of look at this sometimes and go, this looks a bit weird, where's your revenue stream, where are the profits? And there is no revenue stream, right? It's a loss-making enterprise, but it's really product and customer and market development. How can we be sure that we're really making something that people want? And for about the last 16 or 17 months, we've offered a prepaid debit card. So that's in partnership with Wirecard, which is an e-money issuer in this country. And it's allowed us to get our product, and by product I mean our mobile applications, out there into the wild and get customer feedback. We've now got something like 135,000 people using that app, and we've invested some money, probably £4 or £5 million running this prepaid scheme, and that's given us a huge amount of confidence that actually we have a product that people love. So that's kind of phase one of the bank. We're moving into phase two now, which is with the full banking license, we can actually launch current accounts on our own license. So it will be a Monzo current account, and we're hoping people will deposit their paycheck, have their direct debits and their standing orders, and they'll get a Monzo full debit card they'll be able to spend on. But ultimately there is the aim of making a first revenue and then profit. I think the first answer is overdraft lending. So we'll take in deposits and we'll pay 0% interest, and then we'll lend out money to people, as I said, subject to credit checks and what have you, and affordability checks. And that net interest margin, the difference between 0% that we take deposits in and a higher than 0% that we lend out at, will form the majority, in fact, probably 100% of our revenues, more or less, in the next year or two. And that's kind of the second phase of the bank. I think we can break even on about 300,000 or 400,000 customers with a bunch of assumptions, which are assumptions on how fast you're growing, how much you're investing in new customer acquisition versus monetizing existing customers. If we get there and we're growing quickly, we'll probably continue to reinvest in growth. And that is the second phase of the business, is balance sheet lending. I think the third phase is around a marketplace. And I think that's probably where we're quite different to many traditional banks. So, we don't aim to offer a Monzo mortgage or a Monzo credit card on our balance sheet, at least. What we aim to do is position Monzo as a control centre for your entire financial life. So you as a customer might have a mortgage with Barclays, an ISA with Nutmeg, you might use TransferWise to send money abroad. It's great that you have this choice across the market because you're getting really good customer service and often really good price, but it's kind of a pain to manage 15 different accounts. And so what Monzo wants to do is is sort of re-aggregate those different services in a single platform and offer you visibility and control of all of your money, whichever balance sheet it's on. The long-term business model in that third phase is much more around affiliate fees, referral fees, or profit shares with these third parties that access the platform. So it becomes much more of a marketplace than a traditional balance sheet lender. So we don't track traditional financial metrics like a normal bank would. So for example, assets under management isn't something that's like a KPI for us really. It just doesn't drive our success in any particular way. I think for us the key thing is people signing up for accounts and using those accounts actively. And so in particular, what we track right now is our single KPI is the number of 7-day actives. So people who have used the card in the last 7 days at least once, and typically it's more like 10 or 15 times. And is that number increasing or decreasing in absolute terms, and in relative terms to our install base, is that going up or down? What we're actually seeing recently is the proportion of active users is actually going up as a proportion of all installs, which is telling us that our product's becoming more effective. I think when we launch a current account, the very similar KPI is basically the number of people depositing their salaries. That's a really good indicator that it's a primary customer relationship. I think all things follow from that. So assets under management will follow from that, but not the other way around. I often struggle to have a sort of reasonable conversation with bankers because it's often not like an economically rational decision from a customer's point of view. You know, the banker says, what's in it for me? What economically, what am I getting? You don't pay me £150 to open an account like some other banks. You don't give me cash back like Amex. You don't, whatever it is, there's no interest rate for my savings. Like, why would I do this? And for those customers, you can say, okay, well, for foreign exchange, right? You get free foreign exchange. Like, oh, okay, yeah, I understand. For foreign exchange, I'd use it, but everything else, I don't understand. The majority of our customers are not like that. The majority of our customers earn, I don't know, £30,000 a year, £40,000 a year, and it's an emotional decision. And the biggest emotion that they cite when they're talking about their money is anxiety and stress and just this feeling of a lack of control, that I don't know where my cash is going and I overspend, and when I do, I get hit with fees and charges by my bank, and it just like, it feels too hard. In a world where I've got these apps like Uber and Amazon Prime and these things where I tap and it works. It just works, My bank isn't like that. It feels slow and clunky and outdated. I feel anxious. I feel like I'm not in control. And so Monzo gives you that control. It shows you exactly what your balance is. It tells you when you spent money. It tells you if you're approaching your budget for the month, or if you're going below zero. It will warn you beforehand, not afterwards. And it's that feeling of control, I think, that most people really like. We've built a core banking system in-house from scratch in the last 2.5 years or so. It allows us to do a bunch of stuff that the traditional big banks can't do because their systems were built in the 70s and 80s and 90s, and they were just sort of, mushed together like Frankenstein's monster, basically. For example, when you make a transaction with Monzo, we authorize it and book it to a ledger in real time. There's not a sort of shadow ledger that you book overnight, and so we can tell you up to date how much money you've got, and you can freeze your card. And then no transactions will be authorised, so you can go and use it contactlessly, and if your card is frozen, the contactless transaction will be declined. In every other bank in the UK, you use your contactless card, even after you've phoned up to cancel it, it will still go through, because of the systems that don't work in real time effectively. Or another example, we connect directly to MasterCard and we access faster payments and backs. We get the full amount of data that's coming from those schemes, and with a MasterCard payment, for example, there are something like 150 data elements, approximately, right, which tell you things like what's the address of the merchant, what's a category, where is it geolocated, all of these pieces of information. Was your card used contactlessly or chip and pin, or did you enter the pin, did you sign? All of these things are contained in that message. We can ingest all of that to do analysis on it and present it immediately to the customer. And that really, really helps with things like fraud detection and analytics. The big banks, for example, built these systems a long time ago, and because storage was very expensive 30 years ago, IT storage effectively, they didn't bother storing this stuff.
Who do you compare yourself with, and how would you describe the current operating models of Challenger Bank?
So we don't really look at competition. It's just not particularly relevant. We have 100,000 customers. There are 80 million accounts in the UK. Even if you added up all of the customers from all of the Challenger banks, it's still not like 1% of the market share. The thing that kills startups is not other startups or other competitors, it's people not caring about what you're doing. And so you need to focus on your product and make sure you are doing something that customers care about. And so just the fact that a bank X or bank Y is doing something else, it's kind of not relevant. if I was looking to launch a bank today, I would do one of two things. One would be to be ultra efficient balance sheet lender. And I would take fixed term deposits and I would price them at whatever it is, 1.7 or 1.8, whatever the best buy table is at the moment to get in the liabilities. And then I would pick some kind of asset class that I thought I could lend into. You lend them out in some way and you make net interest margin and you try and optimize your balance sheet and keep your operating expenses as low as possible and use the internet and technology to make things more efficient. But you don't bother really with things like much of a brand or marketing. You just rely on price. And there are lots of people who've done that really, really well. Aldermore, Shawbrook, Paragon, Charter Court, Masthaven, Oak North, on and on and on. These are all new banks. There are actually about 20 new banks in the last 4 or 5 years. But they don't invest in marketing, so no one's ever heard of their brand. And that's totally fine. It works really, really well for them. They build a bank worth $1 billion or $2 billion after 5 or 6 years. Great result. Really good for customers as well because you have more choice, better customer service and better price. That is one model. The second model is basically you obsess about user experience and interface and brand and sort of the real-time flow of data, and the balance sheet is less important somehow. And that's clearly what we're doing. I think the two models work in conjunction really, really well, because when you want a mortgage or your business wants a loan or whatever it is, you use the great interface which then plugs into one of these balance sheets to offer you the best price and amazing customer service. Particularly with PSD2 and open banking and APIs, I think that sort of synergy, that marketplace works really, really well. The problem comes, I think, when you try to do both. When you're stuck in the middle going, we want to be a balance sheet lender, but we also want to do customer experience and UX and really have a cutting edge app, and you're not really good at either one. I think then you're stuck. Particularly if you're one of the traditional high street banks and you also have 1,000 branches and 50,000 staff and legacy IT that costs you $3 billion a year, then you're really in big trouble. We've all got that friend who's sort of in control of their money. They switch their gas and electricity every year, they've got a spreadsheet with all their incomings and outgoings, they've opened an ISA and they put the maximum allowed into the ISA, they contribute the maximum to their pension. It's all sort of in order. They take their Tesco club card and their Sainsbury's Nectar points and they always collect them and always redeem them and they feel like they're in control, it seems like. They've got their house in order. And then you've got everyone else. And that everyone else is 90% of the population really. And what we're trying to do is write software to deliver that kind of experience, that 10% experience to everyone else who frankly can't be bothered or feel like it's too much hassle or too much administration or don't want to read all the paperwork or wait and hold for the call centre for an hour. Is that going to happen in January 2018? Absolutely it's not. It's going to take the next 10 or 20 years, I think. We don't have a 5-year roadmap. We probably don't even have a 1-year roadmap. It's not that useful. This kind of waterfall kind of let's plan it all in advance and then deliver it step by step provably doesn't work very well. We're much, much more iterative with our customers. So we will have an idea, we'll test it with a small group of customers, a bigger group of customers, and if it's working well and it achieves the business objectives and you've done all the risk and compliance and what have you, we'll roll it out. And so some of the ideas at a very high level are, yeah, absolutely, switching on gas and electricity every year will save you about 300 quid. And we can make that automatic. Literally, you could click one button and then just every year it will switch automatically. You have £4,000 or £5,000 spare sitting in your account, we can help you open an ISA with another provider, again with one click, because we have your name and your address and we've done all of the KYC and AML. Does it work today with Barclays ISA? No, it does not. Right? So planning out the implementation in that level of detail is crazy. However, have we talked with a bunch of fintechs who are really, really keen to provide it? Absolutely. Could we together build these APIs in a matter of weeks or months? Yeah, absolutely we could. And so it's a much looser, the end goal is this piece of software which runs your life and makes everything single tap and instantaneous. Do we have a planned out product roadmap we can give to someone and say, that's it? No. That's going to be the fun of it over the next 10 years, I think.
How do you know what customers want?
We ask them a lot. So we start with what we want. I hate going abroad and having my card blocked for fraud. Super, super annoying, happens every time. Once I get it unblocked, I hate being charged 8% to take cash out. Why don't we just not do that? Every time I go overdrawn, I get a letter in the post 3 weeks later. How about we don't do that either? How about we send you a notification a week earlier saying, you're running out of cash. Here's how much roughly you're going to need. Do you want to borrow it? It'll cost £1. Yes or no? So we start with ourselves and then we broaden out. And so we have a community forum online and you can go and see, I think we had something like 500,000 visits last month. You can see what people are asking for. And then we broaden out beyond that. We get people into the office doing playing with prototype sort of apps and telling us what works and what doesn't work. Even with any new product launch, we have a group of about 2,000 testers that we will roll out software to first, so they can use it for a week and tell us if it works or not. We start at the board. We have a board of 8. We have 4 independent non-executive directors, all of whom have banking experience, I think. I mean, several of whom actually worked in banks and the FCA previously. And then 2 investor directors and 2 executive directors, myself and our CFO, who's been in banking for about 30 odd years. So that's sort of the board. The executive team is about 8 or 9 people. And it ranges from myself, my co-founders. So Paul, my deputy CEO, started out at NatWest and ran a bunch of banks, including Lloyds and AIB and Norwich and Peterborough Building Society. And then Joan is my CTO, who doesn't come from a banking background. And the rest of the executive committee, we have a head of risk, a head of compliance, we have a head of product. So in the executive committee of about 9 people, about 5 have a sort of long-term banking backgrounds. And then broadly the team are about 85 people. About 30 are in technology and product and design. Most of those actually don't come from a banking background. Mostly they come from a technology background or other startups. We have an operations team of about 30 again, so customer service, so the people responding to your in-app chat 24 hours a day. And then so that's about 60, and the remainder are things like risk and compliance, finance, treasury, company operations, HR people, that kind of thing. We try to hire really good people. The problem with sort of trying to buy in skills from outside is either they're generic solutions that aren't really particularly. We tried a couple of external fraud solutions to try to apply to our problem. We found within 2 or 3 days we could build better technology in-house than we could buy in. And so it was just a no-brainer to continue to develop it in-house. And also these external consultants can come in, unless they're upskilling your staff, they're eventually going to disappear and take their knowledge with them, and you're left empty-handed. And so really you've got to hire in and invest in your people to be world-class at their particular areas.
Shortlisted Productions specialise in the production of business video content for corporate clients. Please contact us for a free quote at shortlistedproductions.com.